Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld and this excitement train keeps on rolling. The good news economic data came in on Friday showing that our unemployment rate in the US actually dropped from 4.1 to 4.0. Great news for anybody who's looking at the unemployment as kind of this big wild card for the year, including myself. I've been anticipating seeing unemployment numbers start to rise, and lo and behold, at least for January, see those numbers start to dip down in that January report, which of course is for December. Now let's dive into what we have for the upcoming trading week. All the Magnificent Seven stocks have reported already, so we're not going to get those 7 major names, but there are quite a few names on this list reporting this week, which may be in your portfolio. So let's start off on our Monday session. 784 companies reporting. We start things off on Monday with McDonald's, Vertex Pharmaceuticals, and ON Semiconductor. Tuesday brings you Coca-Cola, Shopify, Gilead, Welltower, DoorDash, and Marriott. On Wednesday, you've got Cisco, CME, CVS, The Trade Desk, and Robinhood. Thursday, you've got Applied Materials, Sony, John Deere, Palo Alto Networks, and Moody's. And finally, on Friday, you've got mRNA, which may be one of the ugliest looking charts you've ever seen. The whole pandemic piece shot mRNA way up, and all of a sudden, it's come crashing back down to those lows. So crazy, crazy stuff. Now, of course, we had Jerome Powell make his statement on rates for the United States, and we're staying right where we're at for a little while. Now come 2 very important meetings with Jerome Powell. And of course, this is critical for you to pay attention to because anything he says can drive these markets absolutely wild. There are 2 presentations he's going to be giving this week, one of which will be at the Senate Banking Committee. That's going to be on Tuesday at 10 a.m. Eastern Time. And then the second one following the next day on Wednesday is probably the bigger of the 2, I would think, is the House Financial Services Committee on Wednesday at 10 a.m. Eastern Time. Now remember, Jerome Powell wields a lot of power, and his stance on the short end of the yield curve is pretty critical. Now, we've heard about Trump and Bessent talking about bringing down the long end of the yield curve, which might create this kind of power struggle with regards to interest rates, which just means more volatility. But certainly, right now, the power hand is in Jerome Powell's court, and we'll see what he says about interest rates going forward. Of course, a lot of focus on, are we going to lower further? Are we going to stay the same? Or maybe even start to raise if we see some inflationary data. Speaking of inflationary data, let's dive into our next piece, which is going to be Consumer Price Index and Producer Price Index, meaning inflation data. Is it good or is it bad? Well, we don't know yet. Wednesday at 8:30 a.m. Eastern Time, you can see we have the number coming out for CPI, and over the past few months, we've actually seen it increase quite a bit. Not a good sign. What's happening? Well, the expectations are we are going to drop to 0.3. See the little red arrow there. So going back to the previous month's reading. That would be good if we started to drop there on CPI. Inflation coming down just a little bit would be a welcome sight for the markets and the economy. But wait, there's more. We have Producer Price Index happening Thursday at 8:30 a.m. Eastern Time. And right now the expectations are we're going to come out right at the same number at 0.2%. So Consumer Price Index expected to fall, and the Producer Price Index expected to stay the same. And our final piece for the week, retail sales. Yes, spending, spending, spending. Right now, as you can see on the right-hand side of that chart, we are at 0.4%. Now, people are questioning, where are we going to go from here? How good or bad does it look? Well, expectations, what do you think? It looks like we've been doing pretty good. We've seen retail sales numbers increasing there above 0 for the past 6 months. That's a good sign. Expectations are, oh boy, coming out at 0, meaning no growth for retail sales, which would not be a really good thing for our markets and our economy. Now, of course, these are just some of the major headlines. What we do know is a lot of wild cards out there with what's going on with Elon Musk and Trump and then all the new administration pieces. A lot of wild cards, a lot of volatility, which I hope that you've been enjoying. If you're nervous about it all, I would encourage you to get back into your classes at Trading Academy. Space available for some of our classes and centers all over the world. So go retake some of those classes, get a refresher, and maybe learn how to adapt to this current market situation using supply and demand methodology. That, my friends, is your Monday morning must-knows. We will see you next week.